What's up, everybody? Good morning. March 30th, 2023. Big day, big up day again. Let's see, how are y'all doing? Like when I see, you remember earlier in the week and late last week, you saw all the tweets we made about the coming short squeeze. It was looming. Ashton made some tweets about it. I made some tweets about it. Looks like we're getting it 2 days in a row. Big update touching upper DD bands and NASDAQ right before the market opens. Crazy. Missed that scalp just about 1 ES point. Oh, you talking about hedge pressure? Yeah, I didn't touch it yesterday either. Y'all are so smart though. I love it.
Talk to me honestly. I'm here.
Oh, hello. Sorry, Matt. Matt's not talking. Matt's muted. So you were saying something about... Yeah, Matt forgot to unmute his mic. So DD, right? The DD band, the nickname Doomsday, the joke about when the name came from is that when we were using it in test, when markets would consolidate, right? You have like higher highs, lower lows kind of thing. Good consolidating pattern, like consolidating right here, consolidating right here. The DD numbers say, for instance, it would be like bullish, 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 bullish on the mornings, and then all of a sudden it would flip bearish while it's consolidating. If you have, say, like a, what do they call it, like a pennant, for instance, like when you have something doing that on daily candles, and you're just consolidating in here, whatever number DD flips bullish or bearish was very accurate at predicting the breakout of consolidation. So with that being said, it can be the thing that corrects any consolidating indication, like a TTM squeeze, a consolidating indication. Which way does it break, up or down? You see it's consolidating. DD, as the rule now states, right, is the positional shift. If SPY is in a mean reversion and DD is 0.8, then SPY will likely break to the bull side before the bear side. We all know that as a rule. So any consolidating thing, Bollinger Bands, Keltner channels, anything that's inside of a daily consolidating range, you would say that, you know, when DD was like positive and positive and positive, then it flips negative in the middle, then all of a sudden it breaks to the downside to keep going or to reverse. That's where somebody in chat goes, man, this is like a doomsday indicator, a doomsday clock or something. Like it tells you when the tide is shifted, right? And people are bearish now. And then of course that is the rule that we have in day trading, is, or any kind of trading, is if DD is bullish, then the S&P index wants to be on the bull side, right? So in general, could it be used? Are the DD bands published yesterday? Correct, they should be. So when you asked if we could use that, the answer is absolutely. I personally don't have any strategy. One second. Let me open up the bot really quick. I personally don't have any strategy that I use that incorporates candles or candlestick patterns or chart shapes, which would be like chart patterns. But it doesn't mean they're not viable. Like, you know, Rocket Scooter could be the one tool that actually adds some weight and gives some functionality to the technical analysis that's always failed, right? Just outright failed. I mean, technical analysis is not terrible. It just doesn't on its own have any ability to predict anything in the market. It's just noise. And you see technical analysis traders, you can't even watch them live stream for like a week or greater. Once people start seeing that they don't consistently do what they do, then the 50-year lie that stuff is just a coin flip gets easily seen. So if you were to add technical analysis to risk management, like with Rocket Scooter, of course you would see that there's some merits to everything, because a lot of our indications are tiebreakers. They break ties at consolidation. Resilience breaks a tie, and a mean reversion DD can break a tie, you know, so you can use that inconfluence of technical analysis to fix the problems. Resilience is a leading indicator. You can take away some of the delays. So I like to say that there's a lot of work that could be done there, and you guys are all more than welcome to create new ways to integrate our stuff with the existing, you know, paradigm. Technical analysis is dying a slow death in the trading industry. Or it's demanding a severe overhaul from traders, right? People are starting to realize in the modern day. I have to say, Gen Z, you guys are so smart. We can't fool you. Like out the door, everyone's like, this, you know, that stuff is weird, doesn't work. The smart internet culture. Everyone learns really quick. DD bands, I'm sorry, let me publish the new ones. Yeah. What happened, my computer crashed, and somebody reported last night. So I'm running the bands right now. Well, I was just talking and telling you that story. Let's go. Here's the bands. It is going to be 404.35. Much right there. And 398.5. So positional risk is what we do here. It's what we show and teach. Everything's looking good out the door. Let's review the market. Getting a late start today. So committed to keeping one of the 3. So I did the ETF thing and I got 3. Oh shit, why can't you see my screen anymore? See guys, I gotta wake up sometime. Triple B, it is 22.7. Here, let me tell you the number. 22.17 Mansoor. It's usually posted in the Discord. I'll post the new one in there. But that is it. It's on my screen. So let's look at it really quick. We're opening outside DD bands, irrational again. NASDAQ. Ashton and I were talking about a short squeeze last week. All the evidence commitment traders pointed to that. We had we have jobs numbers, GDP numbers. These are things we'll discuss today. Market movers clearly, and they're going to be very impactful on today's trading session. So let me get my liquidity map front center, get ready to go. Like I said, I'm committed to, I did 3 of these trader funding things just to try them out, to make a video on how to do it. I beat all 3 of them that I did. 2 of them in like 5 or 6 days each. One of them took 12 days. Total is $550,000 with the funded accounts. So I'm gonna use one of them and just detail like the 45-day run on how to use it, how to keep it, and what to do with it. That was voted on by you guys. Y'all wanted to see. Y'all weren't just interested in how to beat it. Y'all want to see how to beat it and how to keep it. Let's talk about some economic data today. So we are outside the DD band. Just be careful. Market is cautionary, irrational. I'm gonna be trading small if I do trade at all. Already know that pre-market. Looking at this coming out today, GDP came in just a tick lower than the estimate, the forecast 2.6. We'll talk about that. We also have initial jobless claims. This is going to forecast inflation and continual jobless claims. Market opens in 2 minutes, just very quickly. Continuing jobless claims are actually moving up and up, slightly higher. We have a buffer of people that can't get a job. We have the jolt showing jobs available that need to be filled, so people won't get the job because they want too much money. Companies need to start budging and paying a little bit more than they want to pay to get these people in the jobs. If people want really inflated salaries, inflation, jobs going to pay a lot less because they already trimmed the fat. So they got to meet in the middle somewhere, and as soon as they do, companies' bottom lines will come down, be slightly knee-jerk bearish. So the market, when that JOLTS number starts coming down a little bit, or those unemployment numbers start coming out, but overall, people getting their jobs back is better for the economy. And the GDP numbers are what you want to see to reflect that. Now, we laid people off, right, the last year, and GDP is on the rise. Quarter over quarter change is still positive. So GDP is still changing. The change isn't as high as we thought it would be, right? This is how much it changes every quarter. But you can see it's still healthy-ish, despite the environment that we're in. It's not massively crazy like post-COVID world, but the GDP rise is just as strong as it was in 2019, you know, some of the earlier years. I mean, we get waves of big bursts in a bull market, but you can see that it's not unhealthy at the change month over month. So it's a pretty decent GDP. And just the idea is that the question was, did we trim fat or did we hire? Or did we fire essential workers needed for the economy? And clearly we didn't. We came in slightly lower on GDP, which ain't a big deal. Change of 2.6 is still a change of 2.6. So positive. Resiliences are hot right out the door, nice, long, and strong. Redistribution zone long is where I'm trying to go. Everybody smash that like button while you're here. Give me some love. Interesting that TA is slowing down and rocket scooters going to the moon. The only thing, I'm not gonna say this. Honestly, technical analysis was sold by gurus in the 70s, and the only people, like these days, it's sold to you so aggressively, right, by people that sell it. Rocket scooter doesn't go out there and sell. We just trade live and do our thing and live. But you have to be careful. You know, it's easy to look at a chart after the fact and be like, this is what it would have done. But you can't fake a live video. And you guys watch my live trading. You know, the inherent delays, the unpredictability of the stock market, those things can be corrected using principles that we do teach here. So like we can use the risk management indications that we have to correct delays. Resilience is leading indication. DD can pivot and break ties. Resilience can break ties. Liquidity map can show pivots. Everything together can assist in creating, you know, some kind of at least repeatability for use of an indication. Those things are always trying to produce signals, and things cross over. You're always trying to find a signal, and you have to go in there and analyze each one of them. Is this good or bad? Is that good or bad? Is this good or bad? You need a PhD in chart noise, basically, to use them effectively by themselves. So rocket scooter can layer on top of our risk management stuff, can layer on top of any technique, which is what it's designed to do. to create repeatable analysis. You don't have to analyze too hard. I do my analysis in like less than a minute. We already know markets rational across the board. Cautionary on NASDAQ because we did break on the outside of DD bands. Resilience is positive. The S&P, it's pushing lower on NASDAQ. Gotta be careful on these two. Redistribution band, redistribution zone is holding half gap and hedge pressure just like yesterday. I'd be looking for a dip right around hedge pressure, somewhere down in here to go as long as you get nice, long, and strong. Yeah, DD's long and strong, so we're good. So this is another bull day. I'm not going to fade this, but it likely will pull back. This is the third bull day in a row, just a little bit. I might want to grab that dip, but we'll see. If we hold that opening redistribution zone open, then it's again going to be a runner like yesterday, right? Let's put up these NASDAQ bands really quick, 31068. And the thing is with these funded account things, you always have to make your first trade your winning trade. It has to be something that you're so confident you know it's going to win, because you have to put some buffer in to beat that static drawdown limit that they have. So here, QQQ, bull long up, I'm looking for support down in there. If you have resilience is positive, then half gap is support. BLU 312.5 support. Super simple. Analysis is done. Okay, let's look here. Let's make sure. I'm going to see what's going on here. I like being inside the redistribution zone. This again is type 1 resilience. Half gap is support. I'll grab me a nice little V-shaped trade from here to here, and that's going to be the one I hit and hit pretty hard. I love it. Everyone smash that like button. 26 people. 26 people are my friends. 160 of you, you're not my friends yet. Appreciate you guys. It's on the liquidity maps at the bottom of the BB band. Go listen. VX, sorry, rationality, real side. So across the board, really good, really right, like really strong. Alerts are all good. Everything's nice. DD coming through here. I'm gonna put I need something on the test server real quick. A lot of neat features coming out really soon, and our futures data and live trading on its way. So if you guys haven't checked out Rocket Scooter yet, make sure you do this. The extended trial, once in a lifetime. We're trying to get everybody through our program, everybody that we know, to come check it out. It's $35 a month for the full platform, all your data feeds. Imagine going to TradingView and buying a platform with data feeds. It already costs that much. With us, we're just charging you for your data, and you get 3 months basically free. It's $35 a month, covers your data, full platform, the full education, my entire trader training bootcamp, Ashton's entire course series, the entire thing we offer. That's normally $200 a month. So since the launch, we did this extended trial thing. It is massively popular, massively popular. So check it out, because it's never going to be this low again. I'll go back to $200, and if you're in the extended trial, you'll lock in at a very low rate at the end of it. 3 months, learn everything we have, go on your merry way with risk management in your back pocket. You'll know the difference between us and technical analysis and other things you may learn about how the market works. This is where you're going to gain a lot of information. So check it out. We'd love to have you guys. Thousands of people have walked through our doors last couple months since we launched it out. It has been crazy. Right, going mini viral. It's nuts, and it's flattering. It's nuts. We had to staff up to handle. I mean, it's just cool and crazy, but it's great. We want everybody to learn risk management, and on the onset of COVID, a lot of people didn't learn that, right? And they're getting burned, and it's in a recession, and when to trade, when not to trade, right? Those are the main first rules we teach. That's something hopefully get right here. All right, maybe an idea. Louis said, "You're gonna say V-shaped trade. Does that imply one could take a short down to the V?" If one were inclined to take a short, let's talk about that. Now, don't let me instruct or interact with your trading, but think of it like this. Where's my pencil? Hold on. There it is. So yes, the answer is one may. But one must also understand you have to put stop losses no matter what. What BLU states, and if you pull a liquidity map on the screen, it will show you this. All right, BLU states, if price was lowering and need to find buyers, well, I'm looking for them at hedge pressure. Okay. So if price is lowering, price could be lowering, and you need to make a reason for it to lower. This doesn't imply that price has to lower. It's if markets are going down, you go down to find buyers, and that's where I expect them to be. Doesn't mean it's not a good short down from there to there. As well, there is clearly a possible V-shaped trade as well. You'd have to justify that with something, whether it's Rocket Scooter or anything else. In Rocket Scooter principle, I wait and take the V long up because the signals are long. It's the more probable trade. I go for one trade, but it doesn't mean I can't scalp from here to here and then scalp from there to there and then ride the winner. If I scalp from here to here and I end up losing on the stop, then I must also sit out too. And that's how it works, right? Travis says you're muting. What are you muting? Hit that like button, DD band. Based on the close of the market, the close of 1 hour post-market movement, the close of the Globex Mica. Great question. So right at 5 p.m. Eastern. So Louis, great question as well. One can always justify shorting from pivot to pivot or longing for pivot to pivot in any direction. Liquidity map doesn't predict direction. It predicts where buyers and sellers can be. So if I'm looking for buyers, I'm not going to find them anywhere in here. If they do happen, it's random. If I get to here, I know there's going to be some activity. So the highest probability long doesn't mean there's not a short to there or a long in the middle somewhere, but it's the highest probability long. So when I try to get my, what I call my career trade, I only try to take the one trade that makes sense to build that, especially in this account. Like the first trade out the door, it's got to look good. Is Meta HP really 85? Meta has been acting weird for a while. Ignore Meta, HP, and MHP for now. Something with our data providers give us weird hedge pressure values for Meta. Not hedge pressure values, give us weird options values for Meta. So hedge pressure correlations come out really weird. They're fixing it right now. It has to do with the name change. They're still indexing incorrect information, and they're fixing some of their correlations because they were based on the old Meta. So we're working with them. You bought a Celsius because of you not hooked on Kiwi Guava. Dude, it's a slippery slope. Dave got me on Celsius. He sent me a case of the variety pack, and once I tasted that Fuji apple pear, I was like, ooh, that's crisp and clean. And then I started exploring myself. Kiwi's good. Kiwi Guava's good. Well, I like the berry, the Arctic Blast or whatever. Speaking of, I need my crack fix. Hold on. Okay, let's do some analysis. We did kind of a trade plan class yesterday. Let's go ahead and analyze the sectors. These are the ones that were rotating really heavily. When you see that divergence, positive S&P, negative NASDAQ, you have to ask yourself which sectors are rotating. Tech is gap up. We opened to the high side on tech, which is still, tech was the weaker of the three that were rotating. We were moving out of tech, slightly moving out of financials, and moving into energy. Is that energy trade exhausted and over? We'll have to see. Is there any more juice left in it? This has to do with the BRICS, the global oil axis, right? There's been debates. I was on a podcast last night listening, or in a podcast listening to a bunch of folks talking about it. You know, what will happen as, you know, Russia is going to be settling its trades. And in yuan instead of dollars, right? So that's a huge global shift. The US dollar, the petrodollar is created in the 70s, right? We gave Saudi Arabia some financial aid, some assistance, and ever since then, we got them to settle, you know, barrels of oil in United States dollars. And then as I think in 1975, OPEC countries, participating OPEC countries, also agreed to follow suit. And the petrodollar was born, right? And this year, the petrodollar is now, rest in peace, it's gone. It's going. And so this is the thing. And now we're hearing Mexico might get in on that as well. So it's kind of like an energy political shift as all the other countries that are kind of, it's weird because we used to call it OPEC and NOPEC in the oil days. So NOPEC were oil producing countries that were outside of OPEC, right? Russia being like the main NOPEC group. And now the NOPEC and OPEC are all powering up. So it's a big boys table that the United States doesn't have a seat at and won't have a seat at. What's that going to do? The debate last night was probably nothing. It was talking about China's GDP growth and what happens if they have a little bit more hand and influence of global financial policies and things like that. Essentially, they have a bigger voice, they have bigger control. Is that going to affect the United States? And, is this like time to go to Costco and start stocking up on 25-year shelf life rice-a-roni because things are about to hit the fan? And the answer is not really. I think the smarter cases proven last night in the podcast were stating that, most of China's GDP growth has to do with government spending, construction spending, building infrastructure, things like that. That's not sustainable as far as GDP. It's not a consumer economy like the United States. So we're still the biggest customer of everybody's production. In no way, shape, or form do they have incentive to throw themselves deeper into poverty by doing anything to interrupt our ability to spend money on the shit that they make and require for their non-infrastructure GDP. So I think it's a great philosophy that it's not enough as a trader for me to be scared that the oil's, again, people are parking money in oil because they think the oil, anytime you're afraid of oil or afraid of something happening, oils or embargoes or prices, people always long oil. That is the trade. That's the trade I've seen. I've started out as an oil trader. Anytime some kid is filming a wedding and flies a drone into the side of a tanker, Al Jazeera picks that up and goes, drone smashes into the oil tanker and oil goes up $5, right? Some guy had a GoPro and just accidentally bumped into something. I mean, it's like that's how sensitive oil is to any kind of news. It's goofy but it happens, right? So clearly, ending of the petrodollar is very bullish for oil, at least pre-positioning, as people are moving money into something. But what this does show is that people are willing to long the stock market in general, put their money in company stocks, whether they believe the oil companies are doing better, that's the XLE, or they're kind of just longing it because it's a great place to plant your money at the dip, when clearly, oil prices may become more expensive. That's what people are saying. I don't think it will. As an oil trader, I don't think, like I said, it doesn't matter how much control you have. If your customers aren't buying your product, you go poor. You go into poverty. If your inventory you can't sell, talk about the person that still has a container full of Beanie Babies that's worthless. You go broke. You have nothing. So they have no incentive on creating any problems with their biggest customer. In peacetime, I don't think it's gonna have any effect. In wartime, it's a different story. There's no war between us and any of those countries, so I don't think there's anything to worry about. That's my thesis. In peacetime, it's not gonna be a problem. In peacetime, everyone wants to make money. In peacetime, everyone's kind of friendly with each other. Even though everybody in BRIC, we've pretty much kicked every single one of those hornet's nests. Ugh. Not say we, like I did, but the United States did. But in wartime, it might be a different story. Like we can get energy, you can get tariffs, you can get blocks of shipments, you get all kind of stuff. In peacetime, prosperity's there, and maybe that even it could be better for the economy. We don't know. So ideally, I think it's an overreaction, as there is no immediate shift, no immediate change, and I think that the market's going to respond to that. So as energy's flattening out right now, I see the financials and tech are the ones that are pulling back. You see financials, nice rip roar, outside of open, supporting open, which is good. And let's start looking at some financial stocks. I just kind of want to see what's going on. Let's look at some runners. Let's use the scanner. Let's pop up illiquidity pocket. Let's go ahead and put on some bull setups here. Let's see if I find anything that's a bull setup in an illiquidity pocket, something that's moved. TSM, oh, semiconductor. All right, cool. Let's see what we got. Semis are looking pretty good, and I think that's one of the things people are calling. The semis move up to the bear zone, be kind of nice and tidy there as well. All right, so let me answer some of you guys' questions. Let's look at Tesla today. NVIDIA, some of the ones that were weaker. Tesla BSU, so not really any power there. NVIDIA, since the TSM was looking good, is NVIDIA looking pretty great? All right, nice. They pull up the Soxel because I want to see if semis in general are looking Soxy. Ooh, that is one Soxy play. Where's the liquidity map? Hold on a minute. Hey, you're new here, Michael. Can you please go over how your strategy and software works? Yeah, sure. So the software is risk management focused. It's rule-based trading. So world's first rule-based trading platform. Right now we have charting, scanner, a bunch of tools and modules on the right side here. We are working on getting our DOM put in, and we'll be opening our connection to futures brokers and then eventually stockbroker and options brokers. You actually be able to trade through your broker through our platform, which is what we're working on now. So the technology, Rocket Scooter allows folks like myself or other providers to put different kinds of technologies inside the platform and tie them into rule-based instructions. So I have irrational rules, for instance, or rules that tell me when to sit out. If any of these rules trigger red, I'm already sitting out. If they trigger yellow, I'm already trading small. So I can program rules and have rules that instruct me to make different decisions, whether it's rules tell me to trade small or rules tell me to not use my tools at all. Like where technical analysis fails, that it's always trying to use signals, right? So, we're the first to create almost like a, if you're struggling with the mental game, right? You're always over trading, things like that. And you want to create rules for yourself to sit out and consistently follow them so that you're not over trading. It's kind of like when this is done, I'm going to have a rule programmed in here that says if any of these lights are red, turn off the indications that I use so I don't use them. So first and foremost, it's rule-based risk management out the door. And that's what I teach using Rocket Scooter. And there's different techniques and styles we have here, and you can learn my trading style and part of our boot camp that we teach. We have a bunch of rules when to sit out, a bunch of rules when to trade small, and they're just repeatable rules. The indications on the screen, liquidity map, DD, and resilience together are our three major tools that I use for entries. They draw pressures. And so liquidity map, DD, resilience is down here. Resilience is whenever you're inside of what's called the redistribution zone, which is the gap up or gap down zone. Resilience pivots from the halfway point to the top or halfway point to the bottom, depending on whether it's positive or negative. Now, resilience being positive, that's the move I'm looking for already. This is a resilience-based move. DD being greater than half, it's very bullish. It means that we support down here today at the bull zone. It's for SPY. So I'm looking at SPY. This is a SPY number. This is SPY. So right now I'm getting a feel of the entire index. Market supports here, dash line to there. Market can also support here. So in general, the low of today is very consistently seen as no lower than 400. It'd be impossible to break 400 without a catalyst. So this is showing where the market makers, institutional traders are positioned, and where the hedging and market makers that sold options, which is this hedge pressure. We'll talk about that in a second. Liquidity map is the last thing. All of these things show pivots for different reasons. One of them is exploiting the share imbalance. Resilience exploits the share imbalance difference between close and open. The redistribution of a long share imbalance that causes the gap up. This is showing how the stocks are participating in their own gap fills and shows you arbitrage between the SPY. With this being positive, it means the SPY is undervalued for what the stocks say it should be when they make their moves. And this is a leading indicator. So it's telling me that the SPY is currently overvalued inside of its redistribution zone down here. Undervalued. So if SPY was down here and this number is positive, SPY wants to move to there. That's how it works. I feel like Matt hasn't taken a breath today, caffeine much. I haven't drinking. I just started drinking my Celsius. I'm using that. I'm not, my liquid crack hasn't kicked in yet. I think I got like no sleep last night, so I'm running on adrenaline. I was up till like 4 in the morning. We were testing some new things, and I was reviewing code in one of our repos that has to do with the new releases. So we have new technology coming out, and that's a big deal. So I have to go through and review every line of code to make sure there's no missing pieces and no holes. So I was in a code review last night. Wait. So liquidity map is the last piece of this. Michael, you go here. It's a nice little infographic that we give, which shows basically, if you think like a treasure map. A treasure map says walk to this. If you need to walk north and you're looking for a place to turn right. Oh, on the map there's a tree. So I'm gonna walk north. I'm gonna turn right at the tree. And if the treasure map says there's an X here because I'm looking for treasure, then X is where I'm gonna dig. Right? In the stock market, there's no guarantee you find treasure, right? The stock market is random. That's how stock market is. But there are high probabilities and low probabilities inside of random. And so we exploit the math part of the market. What's higher probability, what's not. So there's consistent things that happen inside of the overall random market, and we exploit the little pieces. And this is an exploitable little piece. The gapping and redistribution zone is an exploit, and this is an exploit. Well, the liquidity map tells me, just like a treasure map, is where I'd like to dig. If I'm a bull and liquidity map says bull long up, which is what these 3 letters mean, I match the letters here with the letters on the screen. This is on our website. You can get it. It's in our Discord as well. The legend at the bottom tells me that black dot is the open right at the bottom. And so what it tells me is if I'm walking out to the island and holding a map at the open, and all of a sudden the map says it's going south. Okay, and I walk south and I only want to turn at one place. That's the place I want to turn. So I'm going to wait until I get there if I want to be a bull. Doesn't mean I have to be a bull because these arrows point up. It means if I want to be a bull, that's the higher probable move that I want to wait for. So I know that if I'm looking for buyers, and the principle that market makers are lowering price to find buyers, then I know that there's buyers here and there's buyers here. Each of the tails of these arrows show buyers and sellers. So in this particular example, right here, there are potentially sellers if we resist the open and buyers if you bounce at hedge pressure. The open and each one of these pivots, tip and tail, is going to be a predictable high volume pivot. Predictable high volume pivot every single time. It's never failed. Of all things out there, this is never wrong. Now, it doesn't predict direction. Let's start with that. You can't predict the direction of the market. It doesn't tell you where it's going to go. But every time you see a tip or tail, you will see high volume or activity. Here's your activity right here. There's that black dot or the open price. So open price, if the market is resisting the open and trading lower, and I want to be a bull because of whatever, my confluence, that's pretty bullish right now. That's pretty bullish right now. I want to be a bull, then I'm going to wait for a bull entry to long from there back to there. So Michael, that's how it works. You put it all together. I have no cautionary flags that are telling me not to trade. Everything's looking sturdy and rational and cool. I might have a nice little scalp from here to here to start my day off. And that's it. So today the market gapped up just like yesterday. Yesterday was a very similar setup. The market, we gapped up overnight, right? And there's a lot of people trying to fade the gap or short or whatever. And Rocky Scooter was like, no, it's long and strong all day long. And then today it's the same setup, long and strong. So I'm going to be looking to grab a dip here as long as resilience stays really strong when we get there. Now watch this. NASDAQ is very suspect right now, so be very careful. So that's how that works. That's just giving an example of my analysis here. Austin says, once the long goes to the upper DD band, doesn't it mean that it's irrational? Yeah. And irrational means I trade small, which means I'll trim my position, hold a runner. So already, this is what I'm looking for. I'm doing absolutely nothing. I'm going to long at hedge pressure and then trade it right to there. So now I know what I'm going to do there. And now I can go and make the same analysis. If you guys are going to give me a stock or something, I can do the same thing with the stock. You know, point. Throw a stock at me, maybe I'll make one. Half gap right above hedge pressure way. Take it off the half gap or HP because it's BLU. They're right next to each other, right? They're literally a couple points away. So I will, since the market's rational, right? We're below triple B, no overshoots, no unusual rules triggering right now. I'm going to expect sharp pivots. So I'm going to enter right here at half gap. They're too close to each other for me to really cost average in, but I'll put in a sizable position for sure right there. Yeah, Lee is right. Like top of redistribution zone and then hold a runner as long as the resiliences are strong. What's the monthly hedge pressure on Roku? Let's see. Oh, it's not Roku. Let's see what's going on here. 65. What's going on here? Ooh, all right. So test server. I'll show you guys something real quick. I know you guys are excited about this. I know it's a new our unusual roll series coming through. Unusual index divergence. This is from the test server. We got that thrown in there last night. This will be loaded Friday morning. Let me double check something real quick. I'm excited about that. Okay, hold on. Check. Okay. We are putting in a fix for the real-time updating of DD. It's going to change a little bit of the correlation, which is great. And I'll show you guys that fix. There's one thing that we did find that we've been working on, and it's not that big of an error. It's enough to as you see, DD is now moving appropriately. This number doesn't move that much. It's a couple percent off. The updating portion isn't catching on the new server, so I've been watching it on the test server just to make sure it's okay. So DD is really 0.88 instead of 0.686. So those of you that are asking about DD being frozen on the chart, that we did find. We dug through the code over the last couple weeks, and we found the correlation that was creating that. So small change, which is good, but it's the updating one. I mean, again, like I said, I make my decisions on 0.6 and 0.4 anyways, so a percent or two is not going to really do anything to my trading setup. But you guys, when markets are crashing, you're going to watch that DD number, be sensitive to that. Break of bull zones and bear zones, the updates are good. So good to see that. That's a fix. I dug through a lot of code last night to double check everything to make sure we have everything correct. Oh yeah. Let's take a look at something. Apple. Yellow resilience is different to is reference to MHP. This tells you whether MHP is support or resistance. Yeah, that's correct. So the yellow resilience is the tiebreaker at yellow for the S&P and for the NASDAQ. I'll walk through that in a second. Both of these are tiebreakers at the respective lines. So half gap is tie broken by resilience. Monthly hedge pressure is tie broken by resilience as well. So this is an aggregate of all the stocks. An example is if the S&P is falling or NASDAQ is falling to monthly hedge pressure, and this yellow line is positive, it means all the stocks are supporting their monthly hedge pressure. So the index will track the stocks. Then the indexes are going to deviate away from what the stock's pressures are doing. So it's a tiebreaker only when you're at that line. So Apple's a bull long up, as somebody said. Right, Apple right now has no end right here. Let's go ahead and put monthly walls on here to look for that. Apple's a straight bull long up on. There we go. There's the long, right? Again, I might miss the trade on this eval thing. DD band just tapped on the S&P. Nice long and strong. Everything's looking hot today. Long and strong again. Probably gonna carry from tech. I do want to see that hedge pressure bounce to take along. So even these like nice little short squeeze gap and goes. You see Apple, if you're saying analyze Apple, bull long up. This is the trade I wanted to take the S&P, right? Bull long up is open, blue, open. That V-shaped trade I talked about, that's what bull long ups do. Open, blue, open. Open, blue, open, right? Just like that. Vixen liquidity pocket. Let's talk about that really quick. Illiquidity pocket, yeah. So be careful on spontaneous volatility erupting as the market trickles higher and higher and higher. UVXY tapping the bull zone will flip one of these guys yellow, and we'll know that I'll get that dip that I want probably midday. So now that I see this coming up, this is not a chase. I'm not going to chase the long. I'm going to wait midday for that sell to here, and it's probably going to happen around lunchtime. We've seen days like this. Usually 3 days of rally is not normally what you'll see. The market does need to consolidate. And when it does, it's probably going to spend the rest of the morning selling. I have no indication of that other than the Nasdaq's pulling back, hitting upper DD band. And when it relaxes, I'm going to fire from hedge pressure for sure. Yo, what's up, Matty B? How y'all doing? Okay, everybody, if you don't mind, head over. We're going to go and we're going to do an early Zoom call today. Yes, that's correct. I'm testing some things in the scanner real quick. And test. Okay, add. Map. Okay. Good deal. All right, I like what I see. I'm reviewing something on the test server really quick. This is very big because before we get our futures data project launch, our release launched with that, these other things need to be corrected to go with it. And this is a huge, huge, huge up for us with the company because this is going to prepare us for the next phase of rapid expansion. Like if you think we're expanding fast now, it's about to go 10 times the pace. I can't tell you how, but let's just say that you can hear our name everywhere in about 2 months. So it's big. We're more rapidly pressing for a new thing that we're doing. Okay, let me do this. Liquidity map. BR. So I'm really excited about the changes. So we have to make sure everything's ultra polished. We've been building so many tools. We have to ensure, ensure, and triple ensure the integrity of all of them to make sure we didn't overlook any tiny little pieces. Okay. Let me do this. I'm making a spreadsheet really quick. Okay, let's just do this. Thanks for an excellent show. Is the volume? So let's see what we got in the office today. Oh, so no Halo today. Oh, I guess I'll have to go wrap up some Final Fantasy VII Remake. I love the remake. I don't know if anybody's playing it. I don't want any spoilers aside. Spoiler talk here. But Final Fantasy Remake, it's weird. I don't know if I'm the only one that's playing that game. But that's from my childhood. It's my teenage years. I got a PlayStation when I was 14, 15 years old. One of my birthdays just for that game. I'm 41 now. Ooh. But the remake came out and there was a Steam sale. Someone grabbed it. Anytime, like a lot of times I'm here till 2, 3 in the morning working. So like if I'm waiting for my development team and I got to kill an hour or two, I just have a controller that Bluetooth into my computer so I can play, just kick back in my chair and play some whatever, some Halo, some Final Fantasy, whatever. And the remake is really good. It's like a different game, but the same game. The remake mechanics CMod, it seems like, you know, Final Fantasy 15 and Kingdom Hearts, that same group that made Kingdom Hearts, which I love that game, was like creating the same battle mechanics for the new Final Fantasy games. It's very Kingdom Hearts like. If you ever played it, you'll feel it's the same. It's almost exactly the same. Kingdom Hearts is that same battle mechanic. There's no like it's just like 15, which was just like Kingdom Hearts. And it's like they moved to that real time combat because all the popular games are like that, like God of War and, you know, I mean, all the big games have that combat system like that now. Everybody likes button smashers. So I miss the turn-based. I wish they would release the game with like, you can change the two options. Do you want real-time combat or you want the old school turn-based RPG? The slow scrolling through menus. But either way, the story's pretty cool. I don't know. It feels like an alternate timeline. That's all I'm going to say. Which, you know, my nostalgia factor was like, if it's an alternate timeline, does Aerith not die? Spoiler alert. But if you didn't know that that happened, you know, from 30 years ago, then that's an old spoiler. But you know what I'm saying? Like, I know the whole game, the 3-part series, the game 1 is just Midgar. That's what Fake Pear Bear told me. He's like, I want to tell you one thing. He said the entire first game is Midgar. I was like, okay. How do they take like a 4-hour segment of the first game and turn it to like a 40-hour game? And they did a pretty interesting job. It's actually not bad. It feels cool. It's like a whole different story, kind of. As I'm watching it, there's clues like it's an alternate timeline. It's like they're acting weird, like they all know each other, kind of, but they don't. I was like, What do you got? MK as an answer. Thanks for an excellent show. What do you base liquidity map on? What's the calculations? The volume, the options, the underlying? No. It's not the volume, the options, the underlying. Liquidity map is based on 3 things. Bull zone, bear zone is one of them. So identifying institutional positions, that's what bull zone, bear zone does. Those positions are hedged, right? If you're bullish in the market and it's a bull zone, it means you've bought against the market, against a market maker, against a dealer. It's not a trade between 2 traders. That'd be a washed trade. The risk would be spread between one trader and another. The banks are taking risk because they have to. Then they're going to hedge the trade. So a bull zone has market maker calls all riddled out through it because they're short to the bulls. And so those calls are sold to them by options dealers, and the options dealers have risk of those calls going in and out of the money, same as the puts. So those options sold to the original equities market makers, right, who are trading against the bull and bears and the equities. The options they hold are sold by other market makers. It's a second market maker in that triangle. That market maker is hedging the sold options exposure via delta and other Greeks. So hedge pressure is exploiting options seller hedging. Bull and bear zone is exploiting share market maker positional risk. It comes from the options world. Yes. So all the options that exist, our algorithm knows every options trade that's taken place. Is this market maker? Is this not? That's what our technology does. We can filter every single options trade for every single thing that exists, for every single option that Opera has information for in the real-time options data feed. It's real-time, by the way. We will know if it's a market maker position or not, a zero risk position or not. We have a way to see that. The filtration of that. Yo, what's up, Rinko? I want to show you something real quick. If a market maker does an execution, you see, we determine it mathematically. Okay. We determine it mathematically. It's not published information. It's not something that people go, here's market maker order flow. We know the behavior. We look for the behavior pattern. That's how we do it. So if you know that, an example, here's a pattern. If I've sold a call and delta of the underlying is 0.3 and delta moves to 0.5, I know that somebody has to long 20 shares per contract to offset the delta change. If we see all of that happen at once, you know that's a delta hedged option. So you know the only people that are fully delta hedging their option are market makers. It's very easy to understand that part, right? So if you look for simultaneous order flow in all the markets, you can see that type of trade relationship appear, and you just aggregate all the mathematical mathematical results. So, right, if I see you sell an option, if I like seeing the order flow, immediately somebody sold a call, right? and immediately bought 100 shares. MK, tell me what that means. Oh my God. If say I sold a call, S&P's at 404 exactly. I sold a 404 call and bought 100 shares at 404. Wrap your head around that particular trade. Yeah, so if I wrote a call and I bought 100 shares at exactly the same place I wrote the call at, then I'm fully hedged no matter what. Right? If the call goes in the money, somebody's going to buy the shares from me. Well, I have them. I offload them at the place I bought the shares. If the call goes out of the money, then I own the shares and I make the premium on the option. Either way, I'm fully hedged, right? So if I understand that I'm hedged, right? I see a hedge, right, that appears in that particular setup. And that's just a generalization. One would assume if you're making zero risk trades, you are a market maker. So we identify zero risk trades, and that's about as far as I can tell you. Does that make sense? And our system is so powerful, we look at the entirety of the market in real time. So we have massive army of server computers analyzing the opera data in real time all the time. Ooh. Does it use zero DTE options calculations 100%? I mean, 80% of the net notional value of the SPX is in zero DTE options, right? So the open interest, there's so much money. We use all options. So daily mode for anything that you're looking at uses all options. We are pretty much right here. Resiliences are positive. Nasdaq resilience is still positive. Ooh, it's risky. Let's go. Just a small trade. I'm going to add one here. I'm going to get a little bit lower. Add one more. Make sure nothing come to the news here. Right here. And I'm going to trade it back up. Wait. Love me some Celsius. What's going on here? This is so weird. All right, approaching again. I'm just looking for a nice little V-shaped trade. I'm not taking much, just a couple contracts. We are close enough. It might consolidate a little lower. Resiliences are still positive, but we are kind of pushing a little lower on S&P. So a small contract, not a lot of risk, not really. Still slightly bullish. We did have that slight irrational sign, IWM hedge break. I'm taking a small trade. I'd like to see it bump one time to the downside just to see if I get something here back to there, but we'll see. Probably gonna have one more wave down, which is good. I'm gonna keep an eye on resilience today. Thank you again, MK. Oh well, I mean it's it's my pleasure. I mean, one of the things is that, you know, having a new technique, a new approach, proprietary. It's like, as much as I'd like to geek out and write a paper about it, how the calculation is very sophisticated. process. It's not just like a, well, hedge pressure is you add this up and divide by, 10 and multiply by 3 and whatever, right? It's we have a whole army of computers grabbing data and analyzing data, looking at trades. It's entirely, like, even if I were to sit here and talk about how it works, it would just be hours to go through each piece of the correlation. It's not a simple. The hedging model that I created is very complex. And the examples when I teach this, like when I'm explaining to you, I'm giving you a generalized version of like a hedge, right? The example is, you can obviously see a zero risk trade. I sell a call, I buy 100 shares, right? So if that call is exercised on me, oh, there goes SPY. Resilience negative. Be careful here. Might get a bigger dip than I thought, which is good. Just one contract. I do want to stop if we do lose the close price, so keep an eye on there. DD at 86, which means we can't support right there at the end of the day. So I think a nice little burp up, and then we start trading lower. It feels that way to me. It's one of those days where it's going to do that and push lower. Just be careful today. But that, yeah, the generalized fully hedged trade, if you can see that, one could assume that's a market maker. Why would somebody just be engaging in the market at no risk? Nobody wastes their time to sell a fully hedged spread, right? You're not going to have a synthetic position that takes no risk unless you get paid to just take positions. The only people that would trade zero risk would be market makers. So we identify zero risk, partial risk, different things we know market makers have to do, and we watch it all day long. So even if I told you how to do hedge pressure and bull zone calculations, and you wouldn't be able to recreate it. There's so much data in the Opera pipeline, you can't parse it in real time. It's impossible. There's no computer on earth that can parse that data in real time. So there's even tricks on how to parse it, and so it's like a. It's a whole, it took 3 years to develop this entire, where we are now. So it's pretty cool. And I love talking about it, but then also it's like, I can't talk too much about it. There's just so many options. The data feed is just massive. And so, just imagine if you have data feed where you're just looking at SPY candles. You're just getting one WebSocket with just candle data. Imagine SPY has monthly options that exist for years and weekly options that exist for 6 weeks, and you have every option has tons of strikes per calendar day. So SPY itself is a whole massive data set just for all the options that exist for SPY, and we're looking at all the options that exist for all the stocks. So imagine how massive that infrastructure is to crunch all that data at once, just to create monthly hedge pressure. Resilience. We need 505 monthly hedge pressures for all the companies in the S&P, which means we have to do that calculation. We have to look at every stock's entirety of options landscape. Apple, all the options that exist for Apple. Meta, all the options that exist for Meta. All 500 stocks. And we give you that calculation in 30 seconds. Imagine how crazy it is behind the scenes. So that's why, like, even if I tell people how the stuff works, nobody can recreate it, because it literally takes an army of computers just to crunch the data. So the cool part about it is that hedge pressure, even the correlation itself, I mean, you can't mistake it. Every time you touch hedge pressure, you will see a volume spike. It's accurate, very accurate, in fact. Every time you touch monthly hedge pressure, there's a volume spike. So it just shows that we've identified as much as we need to forecast actionable pivots. With IWM break as a new user of Rocket Scooter, would I recommend sitting out? Okay, let's ask a question. Okay, we use green light, red light, yellow light. It's kind of indication. Green light means if I take my normal position. Let me ask you a question real quick, Mikey. What's your normal position size? Do I always leave the chart on 5 minutes? The time doesn't matter on the chart. I actually usually leave it on 1 minute. So let me put it back on 1 minute. Since what we do is completely different than, I guess, what a lot of you guys may be used to. What time frame do you use? We don't use time frames anymore. See, all these archaic things that were technical analysis inventions, they were designed to trick you into staying married to technical analysis. You ever heard somebody say, well, I look at this on the 1 minute, and then I look at it on the 5, then I look at it on the hour, then I look on the daily, and they look at it in a bunch of time frames, and they try to make that confluence. That's just curve fitting. So we've first, one of their biggest hurdles was to remove time dependence. These are the same no matter what time frame you're on. So time frame no longer matters, which is great. Traders having to look at QQQ from 8 different angles, it's silly. I don't even look at the time. So that's the next thing that we can brag about, is that no longer do you have to do multi-time frame charts for confluence. And like, I mean, I only need one screen with Rocket Scooter on it. The time doesn't matter. 3 minute, 5 minute, 1 minute. These are based on time independent options that exist, right? Well, I mean, they depend on time for their own valuation. What I'm saying is, if I change the time frame, these numbers don't move around. So Mikey says, okay, so 5 is your normal position. What I say is, if any of the lights are yellow, I trade 20% of my normal position size at the max, 10 to 20%. So if it's yellow, I'll just trade one contract. Just one. I don't put a lot of risk on the table with a caution. If, for instance, I wanted to long QQQ at hedge pressure, and I get there and all the lights are green, I'm taking 5 right on the dip. I'm going in pretty heavy with my max position size, whatever yours is. I'm using yours as an example. If I get there and any of the lights are cautionary, it means volatility is possible, overshoots are possible, or randomness is possible. So I'll trade small. Yellow light means caution. Remember green light, red light, yellow light from the skating rink? Go slow, go fast. That resilience is not positive enough. I don't like it. I don't like it. I don't like it. The S&P is sitting at 0. NASDAQ is barely at 5. I'm going to close. I don't like it. I'm closing. Okay. So I see S&P resilience deteriorating, NASDAQ resilience deteriorating. I'm closing early. Don't like it. Don't like it. Does everyone see what I did? We're back at the DD bands on Q. Resilience is deteriorating, slightly going negative. When the S&P, okay, that's students, if the S&P resilience is 0 or negative, it's not bullish enough. If we do have irrational or irrational cautions, I need this to be greater than 10 or less than negative 10. And when I come to NASDAQ, it's also not outside that range. I tie break with NASDAQ, don't I? Right? So, and look at that. Look at that. Literally seconds before I exit, I don't know. Resilience is starting to move lower while the S&P is moving higher. Let's watch this, okay? Again, we need it to be outside of 10 to be very cautious on this. Do you enter right away at the level you want? I usually do. I usually enter at the level that I want. So when I put all of it together, if you guys are just checking it out, pretend that we're going to skip over the irrational rules. And let me just walk you through my entries. You guys want to see an example? Throw me some tickers real quick. I'll do one for the index, and then we'll do an example. All right, let's do this. Okay. Costco. Okay, I'll do Costco. Or Conoco. Okay. Let's do some examples here. Here's my pencil. Okay, ready? Okay. The big 3 indicators, like I said, everybody, if you go to the description and check it out, get the platform now and play along while you watch me stream. You can use it yourself. You get 3 months basically free, just covers your data, $35 a month for the $200 a month full unlock. You can play at the platform immediately starting now for 35 bucks. And you get the full unlock of the Discord, the full experience, full education. You can watch every video we make and not have to do, not have to go pay the full price. I want everybody to check it out. So those of you that are new here, go check it out. It's for 3 months for 35 a month. It's literally the least expensive thing on the planet. Next to a 25-year shelf life box of rice-a-roni at Costco. That's pretty expensive. Okay, guys, ready? All right. Okay. So each of these 3 indications have rules. This is one, and this is one, okay? The rules are as follows. Resilience, white number, and resilience, yellow number are tiebreakers at the white and yellow lines. Even though I'm missing out on the trade, resilience is not really strong right now. Hitting that open, if I was still long, I would 100% be closing right here until resiliences go positive. So whether I close out early or not, don't care. My goal is maintaining a high win rate and winning every trade I do if I can. I don't need to take risk. I don't see this and go, crap, I'm going to miss out. I see this and go, it's not strong enough for me to still engage with the long. So starting at the start of the day, you have to make 2 decisions, rational, irrational, and that's it. So just if I let you guys know, we're over here with a caution, okay? You have some yellow lights. Is a trade small, okay? You have rules. DD and irrational is greater than 0.6, less than 0.4. Res in this mode is greater than 10, less than -10. We're bullish, bearish, bullish, bearish. Okay, so that's it. This is very simple. So I open up the day. Resilience is very positive. Right now, it's not. Right now, it's slightly positive, right? It's greater than 10 in NASDAQ. The S&P is what we really care about. When the S&P is 0 or inside of this range, like it's not definitively bullish or bearish, I tie break with NASDAQ. So today, resilience is telling me the S&P is maybe up. NASDAQ is certainly pointing bullish still, bullish-ish. So again, cautionary trade and already just slightly bullish because NASDAQ is pulling this up. So I can make sure the tech sector is looking great and solid, but the S&P is just not really strong. It's almost balanced here. So what resilience does is when resilience is bullish, it pivots from there. Like we said this morning, I drew this at the beginning of the stream. Bullish res pivots from this half gap to the top of the box. This is a dashed line here. It's a dashed line there to remind you of that. So there is that resilience trade right out the door. And again, if I were in this trade, I would be fully long right there, which is exactly what I drew this morning. The trade I did try to take, but I scared myself out right there because res dove down. And I think, as Barb says, I agree with that decision. You see how that works? So I piece all these together. They exploit different things. DD has 2 functions. Number 1 is if you open inside of these bands, positive bullish DD goes to the upper band before the lower band if it hasn't touched before. This is a futures thing, you futures traders. So those of you that are here from the futures world like Rinko, these are manual calculations. We'll talk about the futures stuff today in our classes. So I draw these on here manually, which are produced by a bot in our Discord. When we get our futures data in here, it'll all be automated. So some of the green lights and red lights down here are manual. We don't have them fully automated yet, and we're getting them like one at a time. So the green lines that I draw, a bot produces them in the S&P, and this ratio, just bullish ratio, pivots higher or lower. The other function of this is if this is bullish, then the S&P maintains the bull zone if it's bullish enough. 0.8 is greater than 0.6, then it's support here. Okay. You see how that works? Live on a daily basis. Oh, yes, sir. And you can watch all the other streams. You can see my live trading on camera. I do all the trades that none of the streams are deleted. They're all there. You can watch them, go back in time. Usually about an hour long. And then we do a live Zoom call every day. And that's typically put into our course series. So the Rocket Scooter training has a bunch of modules, risk management, entries, exits. You can go through the entire course to start to finish. The last part is liquidity map. Bring it up. And this is just the index, and I'll show you how to do a stock or option setup as well. Liquidity map, take the letters, match the letters. I look for pivots between open, blue, open, and open is support. So that black dot is open. If open is support 1A, I just draw 3 lines to show if we break through into support, and it goes to some resistance, right? Our exit rules tell us we're going to look for this technique on the outside of the bands. We'll get there. This leg, open, blue, open, is open, blue, open. The V-shaped trade I've been yelling about all morning, and there it is. Y'all see that? So if you piece it all together, you can see that it's pretty much supporting like that. There's strong pivots from there to there. There they are. This is printed at 9:30 in the morning before any of this happens and stays there. The moment the market opens, I can produce pivots. So I long the S&P futures right here and exit the S&P futures had I held the whole way through. Now I scared myself out of the position because I'm trying to do one of those eval accounts. You have to make sure your first trade is your best looking trade. Anything that scares me, I'm tempted to get out of the way. I need everything to be long and strong to build a buffer before I start hitting that account hard. This is a funded account. In these trader funding programs, I ended up doing 450,000. Wait, hold on. 550,000. Two 150s plus a 250. So I have $550,000 worth of funded trader accounts I earned. And I'm not using two of the three. I'm just going to use one just to detail the experience and film every trade in it. So that's what this is right here. So I'm trading, this is futures. I'm doing a live futures challenge right now, 10K to 100K in my own personal account. So I've been doing that for a while. I'm gonna show you all that. So the idea is that you can see if I just draw everything together, let's clean up the charts a little bit. It's just three major tools that say I'm looking for a pivot there. If I support there, it breaks pretty much to yellow line, red line. And then any break here is a stop. And then we have support either at hedge pressure monthly, which is the yellow, or the bottom of the bull zone because of ED. And this is pretty textbook. I think everybody today sees this as textbook. There is a secondary support if DD is bullish and it changes in real time. So if you break through the stop and market collapses, we're likely gonna close in here somewhere. The two scenarios are I'm trading from here to here, probably gonna take the career trade. I don't wanna hold the gamble trade today. This guy falls and breaks through hedge pressure, it likely falls to there today. So low 400 on the worst case scenario, 402.5 support. Best case scenario, and in reality, filling the gap today was probably the trade I do wanna take because those are very not ultra strong. They're strong-ish, but still, it's strong enough to stay long, but only by something really small because cautionary light. Do you see how that works? So I'm not using like any complexity other than just following rules. Trading is hard and complex. My results are obviously atypical. Right? What I do is teach. I only trade live so you can see I really trade with my stuff, and that's one thing that I think is important to the industry. I want to make sure that, you know, anybody that's learning trading, I'm the only person out there that puts my account number, the account balance, all the positions, all the trades. I'm streaming live and center. Every trade I make, you can see. Every trade you can see. There's no missing streams. There's no deleted streams. There's no, oops, I'm losing. Let's cut the feed. It's the entirety of it. There's nobody that does it to that degree. And so that's why we do that so that we can say, hey, look, I really trade when I teach. And if you guys were here last couple weeks, you watched me do these trader funding programs like cake, man. I beat a 150K, I beat a 250K, I beat a 150K. Back to back to back. I only had one losing day in the entirety of those 3 weeks. And it's all live. You can go back and watch any of the streams to see it. You didn't see the DD bands in time? Yeah. You know, Robbie, we have an indication for TradingView and Thinkorswim. You can get those if you need your own tool. You just input the risk interval and it draws it for you. The bot is just for people that don't have either of those two. Is this usable in Globex hours? Yeah, in the Globex area, Renko, we have, you go look at the dynamic hedge pressure, because I know in your time zone, you're going to really want to see that. For you, I'll send you a message for overnight. You want to look at dynamic bots. So overnight, the dynamic pivots are phenomenal. What it is it's using it's forecasting what it thinks hedge pressure might be inside of a range 16 hours early. So those overnight dynamic pivots are for overnight traders or for European Asian traders that are trying to get a glimpse of where our market pivots, our futures market pivots are while their markets are live. So dynamic is something I made for overnight trading. You don't see me do a lot of overnight trading anymore. That's strictly because I, like have a trading platform to develop. So normally I do as much trading as I can in the morning, knock it out an hour or two, and the rest of my day up until I go to bed is typically spent developing the platform. So overnight trading is a little riskier, right? I can get my good career trades in the daytime pretty quickly, like get in, get out, just like I did. And then overnight, but the overnight pivots are fantastic for what they're worth. It's a whole different correlation. It's an estimate of what hedge pressure is, and it's pretty good for what it does. You're only on TradeStation. So all you do, Robbie, is at 5 p.m. is you add a risk interval, subtract a risk interval, and just create your own band. Yep. We need hedge pressure, monthly hedge pressure for DAX. Yep, we need it. We need to have, if we had options order flow for other exchanges outside of US exchange, oh man. That'd be amazing. Yeah, the DD band is the same. It's similar to risk interval. So what you do is DD band is a risk interval distance from the close of the Globex on the equity index futures. So S&P, NASDAQ, and Russell, where they close, where the Globex final trade takes place right at 5 p.m., you add a risk interval, subtract a risk interval, and that is the band. It's that allowed deviation of overnight futures from the expectation of what the volatility should be. So overnight, also, you're going to use the DD bands as well, Renko. So pivoting, dynamic. Are basically what we do overnight. Let me show you an example of that. Let me pull my Thinkorswim front and center. Show you how this works. So overnight, and then of course anybody that's trading anything, and I'll do those stock. Gave me some stocks. I'll run those really quick for y'all. So I'm gonna go to the bot and show you how this works. So if you go over here to bots and indicators at the bottom of our Discord, you'll see there's a bunch of cool bots. The DD bands bot gives you the bands. I run that in the morning and I run that in the afternoon. The conversion, if you need to convert them to the ETF product, this is how I do it. The bot does it. Risk interval number is given by this bot every Sunday. The yellow line number is given this bot every Sunday. Member-made tools are like member-made versions of stuff. Before Rocket Suit or Automates, our members have built tools for respective platforms for you guys to use. Right here, the overnight dynamic hedge pressure. So these are pivots, right? 40.49 and 40.44 in the S&P. Let's go ahead and do that. 40.49, 40.44. Let's just make this blue. Wait, where'd it go? Oh, I know what I did. Let's just delete that. Make that one orange. Okay. I'll make this full screen. $40.49. And those numbers are published when the Globex is closed, before the open as well. So all of our stuff is published. Oh, Oh, come on. Don't tell me that's going to be there. How do I collect this? Whatever. 40.49, 40.44. I wonder, I forgot how I can grab that because I deleted the line. I know what I'm going to do. Oh, well, I'll just control Z that at the end. Okay. If I were to do the pivots here, 40.49 and 40.44, is that what I said it was? So this is where hedge pressure estimates are, at least if prices stay the same. And we did have price movement overnight. So in the overnight correlation, it's a pivot just like so. Opening above here, it's bullish pressure from here to the DD band. That's the trade. And that's exactly how it works. You know how we have long and up, right? With real hedge pressure in the morning and real monthly hedge pressure in the morning. The estimate's the same philosophy. Long and up. It's an LU. It's likely an LU in the morning, and we woke up to BLU, just like we said. So market is falling here. I know it's not going to fade. It's got support pressure from there. And even in an estimate, it's pretty close. Now let me show you like actionable the night before. Let's see the pivots. This is the night before. 30.94, 39.94, and 40.20. And again, these are published when the market's closed. The cool thing about our stuff is that it's published before the market has made the move. It's not a real time. It's all leading stuff. So back to here. It's not like, I say real time. It's not a lagging in real time. It's leading. That's the word I was using. So 39.94 and 40.20. 39.94 is monthly hedge pressure, still bullish. 40.20. There's a pivot. 40.20 is the pivot overnight. Okay. Here's an example. So that number is published when the Globex is closed. We open here. One would assume overnight it's a short up, right? And the liquidity map kind of shows you this short up or two options. A bear short up and a bull short up. Both share a similar leg. So the S and U is what those tell you. Yellow to blue is pressure. Yellow to blue is pressure. One of them has resistance at blue. One of them breaks through blue. So the obvious question is, what happens at blue? When it gets there, does it fall or does it have a massive break with a massive volume spike? And look at that. It gets to blue and there's the pivot. And there's the volume that starts coming on the pivot. And there's your massive break. So you know what the level you're watching for. Look at this random volume right when your PM market's open. So you know that yellow to blue is a pressure and blue is at resistance. And then you wake up and you see it supporting at blue. Look at how much power it gets. You'll see that. So they're dynamic, right? If I were long out the door in an overnight trade, I would close at the pivot because half the time it can do that, half the time it can do that. But I know that's my exit trade. Monthly support, right? The monthly pressure is pushing up, and that's how that works. Does the S&P resilience indicator lag the S&P resilience value at the top of the chart? Oh, no. So what the difference between the two is just time independent of the chart. So if I change this to 5-minute candle, Mikey, then because of the way trading charts work, any indication here is just snapshots of that polling period, 5 minutes, right? So interval snapshot every 5 minutes. It is a snapshot on every 5th minute. So the right side resilience chart and DD charts are independent of what you select here. These update every 2 seconds no matter what. So it's like your real-time history that's got more granularity. So if you like go to a daily chart, like for instance, if I go to daily chart, right, resilience is gonna have one data point, if anything at all. It's one value because it's taking a snapshot every day. So you're not gonna see any history of it. But as you see, even on a daily chart, I can still see the resilience right here. So it unties from the chart. And when I trade, I'm only looking at these right here. This is just reference. Oh, my bad. Yeah. So the idea is that whenever you're on a trading chart and you're like, well, what does resilience look like at its fastest update, right? You don't have to keep flipping. If you like to use a 5-minute or an hour or whatever chart, you'd have to flip back to the 1 minute to kind of see what it is. And then again, it's only 1 minute snapshots, right? We don't go any finer detail than 1 minute charts on here. So this is every 2 seconds it updates. So in reality, you can pop it out, and this is what you really should do. Is you pop this out and make it big if you want. So you can see that when I'm trading, I'm really making decisions on resilience. You can see the difference, right? On the 1 minute chart, while you see that it did dip below, and these are 1 minute snapshots, you can see that one stock broke, traded higher, went down, traded higher. Like you can see it really bouncing around very quickly. Right? So it just gives you more granularity when you're making a decision. When that was happening, this scared me out of my position. So these are like, whenever we made the platform, these are things you guys and girls hinted that, you know, we want this, we want that, and we listen to what y'all are saying. So when I'm trading, I always look at these right here. 100%. Okay. All right, guys, we're going to call it a day. I want everybody to head over to the Discord really quick. Do me a favor. Go to the Discord. Click this link below. Go in there, send me a message. Ask about the extended trial. Like I said, $35 you waste on a cocktail. You know it. Learn something for an entire month. You're going to have risk management rules to take with you. We want you guys to come check us out. We are growing like wildfire. And as soon as we close the door on that, you'll forever have to be locked into paying full price no matter what. So extended trials, you guys are going to be part of our community, and it's going to be worth your time. Because at the end, we're going to give you guys something very cool for life. So, like I said, be in the inaugural group. Thousands have come through to sign up. I think on Tuesday, we passed our 1,500th user account since we launched trial 6 weeks ago. And it's crazy. Get in, check it out, learn from us. Go on your merry way. We have risk management or stay for life, whatever you want. We have a great program. We love to share with you. We're glad you guys are part of it and learning with us. And we'll have a Zoom call in about an hour. We'll meet you guys there. And we'll go over some training, which we do every single day, part of the program. The new resilience widget is fire. I know. Can resize the columns. Ooh. I love it. All right. Thanks, guys, for tuning in. We love you guys. Tiny trade, $100. Wah, wah. Nothing big. Scared myself out of it, but hey, win's a win. We'll see you guys in a little bit.